How will these overnight cues impact our own markets? We have domestic cues in terms of our own earnings as well. We have our research team joining in to tell you just that, what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, yes, the markets ended with cuts in what was a range-bound session yesterday. The Sensex and the Nifty fell for the third straight day, and FIIs were net sellers for the third straight session as well. So FIIs sell figure, however, was much less versus what we've seen in the past 2 days. So for Monday, the net sell was over 530 odd crores. For Tuesday, FIIs net sold over 800 odd crores, and that has dwindled down to around 13 odd crores in yesterday's trading session. DIIs were net sellers too yesterday to the tune of around 110 odd crores. Now, in terms of what is taking place globally, the earnings from the US will be top of mind, and that is really what is driving sentiment at this point in time. It was a mixed close for the US. Tesla underperformed, but the likes of IBM, in fact, reported a good set of numbers. Asia is largely lower on the back of Wall Street numbers. Oil is something which is possibly going to benefit us on the fringe because Brent crude has now come down to around $82 per barrel. It is lower on account of a strengthening dollar, which has sparked weak demand concerns as of now. In terms of result reactions, we do have a lot of result reactions to watch out for. So Mastech, Tata Communication, ICICI Securities, a lot which will take place from the broader markets. And in terms of results today, we have the likes of HCL Tech, Cyient, ICICI Pru, Sterling and Wilson to watch out for. We do have big numbers over the next couple of days, but for today, I'm just going to narrow it down to a couple of these. Well, just watch out for what the Met Department is also saying, because they have indicated that the heat wave is likely to continue over East India during the next 3 days. There could be a wet spell over Northwest India from April 19 to 21st of April. What the larger reading would be in terms of the agri outlook would be something that the street would probably want to watch.
Okay, all right. So those are all the cues. Thank you so much for those, Ekta. A lot of stocks that will be in focus as well, as Ekta mentioned. Vivek, what do you have on your radar?
Well, good morning. Like we mentioned, quite a few results that came in post-market hours yesterday, and there will be significant reaction. First on our list is Mastech, steady set of numbers from the company this time around. On a sequential basis, dollar revenues went up by almost 7.8%, coming in closer to the $86 million mark. Now, when you're talking about the rupee revenue, up almost 7.7%, and EBITDA, EBITDA margins coming in at almost 17.7%. Once again, profitability on the back of that went up almost 13% sequentially. ICICI Securities, a muted quarter from the company this time around. Revenues was flattish, coming in at the 885 crore mark. However, profitability was down almost 7%, coming in at the 262 crore mark. Tata Communications, a disappointing set of numbers from the company this time around. Some one-offs, however, the headline numbers have been marginally below what analysts were anticipating. Revenues are up around 1%, coming in closer to the 4,568 crore mark. EBITDA margins, contracting in, coming in at 22.6%. Profitability down almost 17%. Some of the other companies on the back of news flow, NBCC getting an order worth almost 208 crore. Ultratech Cement has gone ahead and increased its capacity. Now, the grinding unit in Bihar has seen increased capacity of 4.7 million tons per annum. And Equitas Small Finance Bank, some positive news flow coming in there. RBI has granted an authorized dealer category 1 license to the bank. So some positive development as far as Equitas is concerned.
Okay, all right. A lot of stocks in focus. Finally, let me go across to Nigel, joining in with all the cues from the F&O space this morning. Hey, Nigel.
Well, morning, Sonal. Yesterday we saw the premium on the Nifty. The futures out there, it contracted around 30 points from around 50 points out. So there were some signs that maybe there was some shorting activity that was taking place. And that's correct, because the FIs, well, they added closer on 3,500 short contracts, closer on 7 shorts added for every 1 long position. The positioning now continues to remain net short, though it's not as bad as what we were seeing in the recent past, at close to around 64% of the positioning on the short side. On index options, well, the activity is mixed out there. So they bought both calls as well as puts, but they bought a little bit more calls in comparison to puts. But on the option side, on the writing side, well, they wrote more puts than calls. So that's telling you that maybe at lower levels, we'll like to see some buying as well that'll come in there. A couple of strikes we're looking at, given that today's expiry day. The 17,600, 17,650 call, both of them were very, very active. Now, the 17,650 call, the premium ended closer on 30 rupees. But at the start of the day, it was around 50 rupees. So for those call writers, they're looking to defend the 17,700 odd mark, which becomes a bit of a resistance on the upside. On the downside, though, 17,600 put, well, that's a fair bit of open risk built up. So the last couple of days, in the last few days, we've gone around that 17,570 odd, and we have bounced up there. So it appears the 17,550 odd level should hold out at least for today's expiry. And on the upside, there's resistance at around 17,700 odd. The bears believe that mark is not even going to be seen. Now, we're going to be seeing a positive opening, so let's see whether or not we can build in from there. But if we can get past the 17,700 odd mark, then those call writers will run for cover. So let's see how this one goes. Back to you.
Okay, all right. Interesting times, right? Thank you, Nigel, Vivek and Ekta for joining us and prepping us up for this trading day ahead. With that, we'll